4 of the top aerospace stocks. I myself own one of them, and it makes up almost 12% of my portfolio. So we're going to do a little bit of due diligence and diving into these 4 and seeing which one comes out on top and if any of them are something that you guys should look at. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check my channel out. If you like any of the content in this video, please stop right now and hit that like button. It really helps me out, and it helps this video get seen by many more. So definitely drop that like for me. And if you haven't already, please subscribe to the channel and come back and see me. My channel is all about making sure people are aware of the different avenues to get a piece of the pie. And in this video, we're going to be talking about 4 of the top aerospace stocks. Alright, we're going to be going into a little bit of DD, and I'm going to be using a couple sites to get into it. But stick with me, because I know how you guys don't like to sit around for the DD, but this is going to be quick and easy and fast. I'm going to look at some key things and show you guys what I look at before I get into a company, so stick with me. I see that you guys like the quick 60-second videos a little more than actual DD, but stick with me. I promise it's going to be quick. Let's get into it. Alright guys, I'm on Dividend Watch. I'm going to use Dividend Watch to do some of the research, and if you guys don't know what Dividend Watch is, make sure you check Dividend Watch out. It's a place where you can track your portfolio, analyze stocks, track your dividend income. They even give you investment ideas, and like I said, it's the perfect portfolio tracker. If you guys want to check it out. And if you guys do want to sign up for the membership for Dividend Watch, make sure you use the promo code TY15 to get 15% off of the $64 a year. And you can also use the free membership, but you can only load up to 10 holdings. So if you guys are interested in Dividend Watch, make sure you check it out and maybe use the free membership first. But if you do decide to use its paid membership, make sure you use the code TY15 to get your 15% off. Alright, and now let's do some of this research. The first company that we're going to start off with is a company that I have 12% of my whole portfolio in there, and it's the biggest holding in my whole portfolio, and that's NOC, Northrop Grumman. Alright, now Northrop Grumman is trading at around $360.99. The company operates through 4 segments: aeronautic systems, defense systems, mission systems, and space systems. So all of these companies pretty much cover the same area, but they have a few differences. Alright, Northrop Grumman's dividend yield is 1.64, could be a little higher. Annual dividend is $5.92. And then I want to look at the dividend payout. As you guys can see, they have been growing their dividends over the years, even through COVID times. And then the fundamentals. The main fundamental I like to look at is the net income. That lets you know if the company was profitable this year, last year, the year before, and so on. So in 2018, they were profitable, positive net income. 2019, they was in the negative net income. But 2020, they had a positive net income. So that's a pretty good sign to me. And it definitely has a nice cash flow. It's positive too. That means the money coming in and out of the company is positive. Total liabilities, that's not too much to fret on, because a company could be expanding and growing and gaining more properties and factories and things like that. So they might get a little more debt. But the positive net income and positive cash flow is definitely a plus for me. And the company's growth is pretty good, pretty steady growth. But those are the things I wanted to show you on Dividend Watch. This dividend constant growth, that's one of the big things to me. So this is just one stock, that's Northrop Grumman. Next, we're going to go to a fan favorite, BA, Boeing. BA, the Boeing company, is trading around $232.27. And as you guys see, I see a big red flag here on Boeing. They suspended their dividends. To me, that's a big red flag for any company that suspended its dividends, especially during times of COVID, because these are companies that are big staples. And if you are a long-term investor like myself, if these companies let you down during turbulent times like COVID, they probably will do it again, or it probably show you that it should show you that the company itself is kind of weak. There's a lot of companies that did suspend their dividends, but it's a whole lot that didn't. There's a whole lot in the same field that didn't suspend their dividends. So that right there, to me, it tells me a lot. So Boeing is not on my radar, but people are still trying to swing trade and you can still make money off of it. But to me, Boeing is not a long-term play, because this right here shows me that they don't have a stable enough company to keep paying their dividends. Because if a company stops paying their dividends and you're reliant on those dividends in the future, and turbulent times happen and they just stop paying it, it's kind of bad. Especially when you're paying this price up here, you're putting a lot of money in it. If the company itself is $232.27, it's a lot of money. And then you come down to the net income. In 2018, it was positive. Then it was negative in 2019, negative in 2020. Cash flow was negative in 2019, negative in 2020. And total liabilities, of course, it was going up because it didn't even have positive cash flow. Red flags for me, but they are down right now. But they are definitely a fan favorite. But this is mainly why they're a fan favorite, because they were trading around $422, and they're almost half of that trading at around this 200 something price. So a lot of people want to make profits off the growth of the company, but I'm a long-term investor. I look for more than just the growth. I need stability. But that's Boeing. Next is RTX, Raytheon Technologies Corporation. And again, they're in the same four segments of aerospace systems, intelligence and space, missiles and defense products. All of these companies pretty much do about the same thing. Raytheon Technologies is trading around $87.08. It is the cheapest out of all four that we're going through. The dividend yield on Raytheon is 2.22, which is an annual dividend of $1.94, which is good. That's real good. And as you guys can see, they too have consistent growing dividends. That's a big factor for me. Then you come down to the net income. 2018, they was positive. 2019, it was positive. 2020, they was negative. So they took a big hit, probably due to COVID. Not everybody was able to stay stable. Cash flow, 2018 positive, 2019 positive, and then it went negative again. Not everybody was able to take the big hits from COVID. But like I was saying, even though they took a big hit here, they still paid their shareholders their dividends. So they're a pretty tough company, and their growth chart is pretty good. They did have a big tank, and it went all the way down to $60. Woo! But then they popped back up. But as you guys saw, Boeing still hasn't recovered from when it dropped down. So again, how strong is that company if they aren't able to recover as fast? And the last one, LMT, Lockheed Martin Corporation, and they're trading around the same price as Northrop Grumman at $361.04. They have a much better dividend payout than Northrop Grumman though. They pay out a 2.83%. That's $10.02 annually. That's pretty nice. And you guys can see that they too had consistent dividends. Consistent dividend payout. They didn't waver. And Lockheed has the best net income out of all of them. Net income positive for 2018. Net income positive for 2019. Net income positive for 2020. Cash flow negative for 18. cash flow positive for 19, positive for 20, and liabilities was positive for 18, and they gained a little bit more debt, but that could be a company gaining more resources, taking on a little debt to gain more resources. So again, total liabilities don't really faze me but so much. But those positive net income and cash flow, Lockheed a beast. And now I just want to quickly show you guys what some of the brokers are saying about these companies. Northrop Grumman. What is Robinhood saying about Northrop Grumman? Northrop Grumman is a 71% buy. Alright, they're saying it's a 71% buy for Northrop Grumman. Boeing, as you guys can see, they're making a comeback, but Boeing, Robinhood says Boeing is a 50% buy. Raytheon Technologies, Raytheon. I think I said Raytheon earlier. My bad. Analysts say on Robinhood is an 83% buy, so that's a strong buy. And Lockheed, surprisingly, Robinhood says it's a 59% buy. 59% buy. Alright, so that's what Robinhood says about these. So according to Robinhood, Raytheon is the best one to dive in and buy, followed by Northrop Grumman, and then Lockheed, and Boeing ends up last. Now we're going to check out one more place. Now I'm on Charles Schwab, and Northrop Grumman gets a B rating from Schwab. Boeing gets an F from Schwab. Dang, Boeing. Raytheon Technologies gets a C from Schwab, and Lockheed gets a C from Schwab. So according to Schwab, Northrop Grumman is the best value company to buy, but the rest aren't bad except for Boeing. Again, it gets an F. So Boeing might not be the best for my long-term investors, but for the people trying to swing, maybe you should look at it because it might. That was a look at 4 different aerospace companies. It might be up to you on which company is the best to invest in. If you're looking for maybe a swing trade, something like Boeing, because it hasn't came back from where it used to be around that 400 range, that might be the best for you if you're looking for a swing. If you're looking for something to hold and collect your dividends, Lockheed might be the best, or Northrop Grumman because they pay out a decent dividend, and Raytheon too because it also is on the up and up and it's the cheapest. So if you're looking for the cheapest one, Raytheon, and it's about average. It was a great growth on Robinhood. Charles Schwab was thinking it was about an average company. So that means that company has potential. That company might not be as stable as a Northrop Grumman or a Lockheed, but it has great growth potential, and it's the cheapest if you're looking for the cheapest. If you're looking for the one that gives you the most dividends, Lockheed gives a great dividend. Me, I'm in Northrop Grumman, and part of the reason I'm in Northrop Grumman, I guess if I would have did this research earlier, I would have maybe looked towards Lockheed because I like them dividends. But Northrop Grumman has a sentimental value to me because I used to work for the company, and I know the company is a good company. And I know that because everybody had their pensions, everybody had their 401ks, all that was handled and taken care of. And to me, that also is a great sign of a good company. So all of these companies might be something to look at, but again, you got to make sure you do your own research and due diligence. I just showed you how I do my basic research and due diligence. There's a few key factors that's important to me. I can get into ratios all day, but I like to keep it simple. And because I'm a long-term investor, I just look for value companies that I can hold for a long time. But make sure you do your research before you get into any company. And let me know in the comments what you think about these 4 different aerospace companies. If you like any of the content in this video, please hit that like button. Don't forget to hit the like button. It really helps me out. And subscribe to the channel so you can come back and see. I appreciate you guys coming to check me out. I got plenty more to talk about. Thanks.